And welcome to Mortgage Gumbo, this week's Humpday. Holla. Joining me, as always, James Parker, my co-host, for our weekly podcast. James, got lots going on, and we're going to talk about that. March is a big month, James, and let me kind of give you some ideas on what we've got going on. I'm sure you saw the Fed spoke yesterday. Jerome Powell spoke, and I don't know what the stock market ended up at. I know it wasn't good. It's amazing because losses of 500 used to be like the world was coming to an end, and now it's almost like the norm. It's amazing how one comment, one statement can change absolutely everything. And Powell spoke yesterday, and I don't. What did it end at, James? Do you have that number by any chance?
The stock market? I mean, I guess
Yeah,
I could look at my phone, but yeah, it was 500 points down, and it
yeah,
was all predicated. Like you could see all the traders started making the move
right.
when he spoke and when he sounded a little more hawkish. Like, hey, we're not getting the performance that we would hope from the existing rate hikes, and he means against inflation. And he's using this new term. You know how they like to make up words, so it just doesn't sound as bad.
Right,
He's got this
right.
disinflation. Oh, it wasn't as disinflationary as needed. So
Yeah.
we foresee more rate hikes and maybe even going back to 50 or 75 base point jumps if we don't get that inflation number down.
Yeah, there's no doubt, and I can tell you that that is whoa, got a little loud on us there, huh? That is what we are uh, going to see. I think that we are going to see a 50 base hit, James. I really do. I think what's happening, they've got to slow things down. Everything that's coming out, let's just face it, it's not in a spot where we were hoping it was going to go, right? So this lapel mic here, there we go. I think that's a little bit better there. Let's see. All right, so so what he spoke about yesterday is people are still spending credit cards. They're still using credit cards at a high rate. We're still using things. There's things that are being done that, unfortunately, are putting us in where they're going. Well, things haven't slowed down, right? We're not where we think we should be. We're not where we were hoping to be. So, what does that mean? Well, they're meeting on the 20th and the 21st, and I think we've been talking about this. I don't think 25 basis points on the federal funds rate is no longer even on the table, in my opinion. I think we're
Ooh.
going to see 50 basis points, just because, and then we're going to see things probably a little bit more often. Now, we'll see as the unemployment numbers come out this week. We'll see what happens there. But I think from a standpoint of what we're having to deal with right now, we're looking at where I think this is going to challenge us, James. I really do. So, he spoke. Next week, we've got, at the end of the week, we talked about we've got the jobs report. Then after that, what do we have? The following week, we're going to have the inflation numbers that are going to come out. So we'll kind of see, and you got to keep in mind, it's what are we replacing from the previous year? Those are the things that we're looking at. And that's why, as we move forward, those are the things. What inflation numbers are we replacing from 2022? Well, the ones in March aren't like they were in November and December when we were telling people because we look at the charts and we trust the data on what exactly was going to happen. It was different then. So we're not looking at that. It wasn't, in my opinion, I don't think we were being affected as much as, or we were going to have a greater effect. So now, what do we do, James? Right? What do we do right now? Right? Do we sit on the sideline? Do we wait? And and what is the cost of that waiting? So Saturday we're going to talk a lot more, but there's nobody out there that could predict right now. Nobody likes the rates. I think the rates, and Tito's Handmade Vodka rates brought to you by them. 30-year conventional as of this morning is over 7%. Over 7%. So when people are calling, going, "Hey, what is your rate?" They're high. Had the opportunity to speak to about a dozen realtors yesterday, and hey, where are we going? What are we seeing? Look, we are seeing higher interest rates. So does that mean we just shut it down? Look, it's not pretty, but how do we win? How do we look at taking advantage in this market? And that's what we've been talking to you about and so many folks about. But let's kind of dial it in for a split second. And we're going to really get into the soup to nuts, although I have no idea how soup becomes nuts on that statement. I've heard it my entire life, but I guess it means we're going to get into the nitty gritty and we're going to dig deep.
No,
Right?
it's a culinary reference. The soup is what you start a 10-course meal with, the nuts is at the end.
Oh, all right. Well, there we go. Thank you.
Appetizer to dessert is what they're saying.
All right, good. So, what we're going to be talking about this weekend, we're going to dial in a little bit more. But right now, James, when you're looking at it, you only have. Let me ask you this, James. I'll pose it to you as you know. A lot of times you speak for the listeners. Do you think we've hit the bottom? Can you say absolutely we've hit the bottom of the housing market?
Absolutely not. I mean, the guy just announced that he's looking at more aggressive rate hikes, which is not going to be good for the housing market.
So we can't time it, right? Nobody knows. If we did, we'd be in Vegas right now. Correct? So with that being said, I want you to pull up that chart that I've got there, James, if you could, because I want to kind of give the audience a visual, since this is a podcast, it's not on radio. I want folks to be able to see what we're looking at here, right? So as you're looking there, we don't know if we've bottomed out right now, right? But right now, what we do know is when we're making offers, my buyers are making offers, especially they've got the $5,000 buyer guarantee, all that stuff. When they're making offers, we're getting a lot of the closing costs paid. The sellers are cooperating, right? In 20 and 21, James, were the sellers cooperating?
No, I bought a house in that
You
time.
didn't get closing costs taken care. Everything that you did came from
They
your
didn't
own money.
fix anything. They didn't fix the fence in the back. They didn't have to worry about the cracked window, nothing.
Exactly. So right now, sellers who are having to sell, why are they selling, James? 4D, divorce, death, debt, and distance, right? So they're having to sell. So they're cooperating. Well, if you're looking at that chart for our folks online, it kind of looks like almost like a smiley face, right? We could say that, a smiley face. And on the left-hand side there, as you're looking at that, that is where we're at sort of right now. We don't know if we've bottomed out yet. We have to still assume a recession's coming, which for us in the mortgage industry, we want that. And that we'll dive into that a lot more on Saturday. But look at once we come out of the bottom, James, look at the difference there. See, when we come out of the bottom, James, and start rebounding after this recession, then who's in charge all of a sudden? Right now, your sellers are back with that upper hand. Okay, so then what happens? Then we get back to as is property. I'm right. I'm not fixing anything. No, I'm not giving you any type of closing cost. So right now, even though the rates are elevated, we could take advantage. We're letting the sellers use the buy down, right? They're able to take advantage of the buy downs right now. Those seller paid concessions, we're using that as an advantage. Because once we get on the other side of this thing, and we've been telling you this for months, everybody's going to come out of the woodworks. We saw it when we almost hit 5% in the beginning of February, when we almost were able to say 5.99. So imagine what's going to happen when we're able to start getting into 5.5, 5.25, 5 as we get to mid to end of the year. That many more people are going to come out. So wouldn't you at that point want to be looking at, knowing that you're a homeowner, knowing that your neighbor that's selling that house that you bought, even though the rate's a little higher and you could refinance it, now they're working for you. Now, all your neighbors who are selling, who now are going, hey, you know what? I'm going to go upgrade or I'm going to go move up. They're now helping you with the value of your home when you're doing a refinance versus now you're out there competing with everyone. You're now out there competing with everyone, James.
All right, so is this a sign that the housing industry is about to start heating up? Because I'm looking for signs of that bottom, because that would be a nice, handy little piece of information to have. And so then I see this over on CNBC where mortgage demand recovers slightly despite rising interest rates. So at some point, there's going to be a lot of people who sat on the sidelines because real estate, the interest rates have gone up. But after a year or two of the rates being this high, there's no reason to wait on the sidelines if they're just going to stay like this. And some of these people are going to have to act eventually.
Yeah, I mean, they're not going to stay where they're at right now. Look, by the end of the year, they are going to recede. Again, we don't know that date, but I've yet to meet anybody where home ownership is not the right or the best option. Is paying your landlord who just went up 20% on your rent, is that an option? James, I want my listeners, I want you to understand this. For every 1% in rate drop, 5 million people become eligible. For every 1% on an interest rate, on a mortgage interest rate drop, 5 million more people become eligible for every 1%. And that's with folks who, quite frankly, don't work with Mortgage Gumbo, who try to put everybody in the same exact loan, stuff like that. So imagine when you got somebody like me who knows how to get creative with the financing, who knows how to use buy downs to take advantage of. So that right there lets you know the second things start to recede, you're bringing so many more people into the market. And at the end of the day, we still don't have the inventory, James. And it's not coming anytime soon. It can't. It's not like all of a sudden you go, I want to build a house, and the house is built in a week. We know it's coming down the pike. You got to go get permits. You've got to do construction. You got to do all these things. And it's not enough. It's not enough.
Yeah, and we know where new housing starts are, so we know what the inventory is going to look like in 6 months. We don't know what it's going to look like in 5 years, but we know pretty good what it's going to look like 6 months to a year from now, and it's not getting much better.
And that's why if you do want to be sitting on the sideline right now, at least be talking to someone who you're getting your credit in check, you're getting an idea of where you're at, so you're putting yourself in a position to pounce. Buyers are winning right now. Again, with the dozen or so agents I met with yesterday, right? I was with Florida Lee Law and Title, had over 150 agents last week at one of their events. Everybody's saying the same thing. They've got a property, they want to move it. What do they have to do to move these properties, right? Because the ones that are sitting, so now is that time, be aggressive as that buyer. We know the number on a piece of paper isn't pretty. Let's talk about that buy down, right? The rate today on a 37%. Well, we're going to qualify you at that. But hey, do a 1-0 buy down, you're paying at 6%. If I told you right now today rates were 6%, not 7%, 5 million more people would be competing against you, so to speak. So what do you think is going to happen to home values, James, when all these people start coming back out? Inventory is still way low. We only have between 500 and 550,000 homes right now across the whole country, not in our market, across the whole country right now that aren't under contract. That doesn't leave a lot of options, folks. So if you're ready, get in there, get that home, because it's only going to improve in value, James.
All right, quick scenario, because you bring up the people that are forced to make a buy or sell in this market. You know, the debt, death, divorce, and distance.
Yep.
I have a soft version of that.
Okay.
My neighbor is a guy who recently retired, and he didn't have to move immediately, and he didn't have to make his real estate, happen, in a month or 2 or 6 months or anything like that. He could kind of wait a year or so, but not forever. He wanted to retire. He's not going to work an extra 2 years just because, interest rates are high.
Yeah, hoping Powell makes a good announcement, right?
But I don't know how his scenario works from your point of view, because he's one of these guys where him and his wife had a good job, and they had like an $800,000 house, and they went from 5,000 square feet down to being my neighbor. So that's quite a step down. And so I imagine in my head that their old house had to be at least worth twice as much as the house next door to mine. And do you get a mortgage when you do that downsize? Do you use the equity from your big family home now that all the kids have moved out and you don't need all the room? Do you use that equity to pay for this retirement house, this forever house, with cash, or do you still get a mortgage because you want to hold on to $400,000 in the bank is kind of nice?
Yeah, it's going to depend on their situation and what are their goals, right? I mean, if this is a temporary place, then a lot of people will take the cash, and he may look at it as going, "Hey, this is the only house I got. I don't want a house note. Rates are a little elevated. I've got the cash. I don't know if he's got other properties, right? Are there tax implications? There's a lot of factors that go into it. But in a situation like that, which is unique, right? How many people go, "Hey, I want less," right? So for somebody who wants less, yeah, we got to assume probably took whatever. But again, we don't know. Were they mortgaged to the T's on the other house? Did they have a first? Did they have a HELOC? Did they retire and sell that house because it was just better than maybe they got out of there at even, right? So it just depends on what their situation is. But a lot of times, yeah, when we're doing a house, say somebody's selling, then they're coming to me. Yeah, they're using those funds to put into the new home, and maybe not all of them, right? But a lot of times they'll use those funds because even at 7%, James, having that cash is still better than you having it all to where the only way you get your monies back is for you to be able to refinance, right? And then have to spend. So it's just, there's a lot of different, everybody's situation's different, which is why I wake up every day so excited about what I do, right? You go, "Oh, mortgages, great. Everybody must fit." No, everybody's so different. You could take the people, they could both be teachers, both make the same thing, but they want two different houses. They have two different lifestyles. That's what's amazing. But does your lender, are they a fiduciary for you? Are they reviewing that? Right? And looking out for that person. James, today I had somebody that I had to speak to and tell them, they came to me, they want to refinance, right? They want to take advantage and pay off some debt. They're sitting with a 4.125 interest rate right now. Okay. And we can refinance for them, but while to them it feels like they've got right at 20,000 in debt, in credit card debt. So to them, while it feels like, oh my God, it's just this overburden, the good news is, James, for them, their payments on that 20 grand's right at $400. So for me to do a refinance, I'd have been raising these folks' payments over $300 a month. And they were so thankful because two other people were like, "Oh yeah, you need to do this." And I said, in my conscious, man, I couldn't, I had to tell them why. It's still okay for, we'll continue to stay in touch, but keep paying that small amount. I don't want you to feel like instead of getting 5 credit card statements in the mail next month, you get one mortgage statement that's $300 more than what you're paying now. You're going to feel a lot worse.
Ouch.
So again, you've got to educate. And the other thing I want us to make sure, so take a note, James, I want us to make sure we're talking about these credit repair and credit shysters are coming out in full force. They are wasting no time. They are wasting no time right now. So please be careful on who you talk to, who you are getting advice from. Got a client that I talked to in December, told him what he needed to do to improve his credit. James, he didn't like what I had to say, right? So he thought instead of working out, running, jogging, doing what you had to do to lose weight, eating right, he thought there was a magic pill. So he went to a credit counselor who, in this case, was an attorney, who, what they did was they went and settled with all his credit cards, and his credit score has now plummeted. His credit score has plummeted. So his options for doing a loan are zilch. Right? So again, you've got everybody out there, and they charge them over $1,000 up front to basically charge off his debt. Right? I mean, I put Band-Aids on myself and put Band-Aids on my son. That doesn't make me a doctor. Right? So we've got to make sure, just right now more than ever, be careful who you're speaking with out there. People out there that are shady, they're taking advantage of going, "Hey, these high rates, we need to get rid of this, get rid of that." There's no shortcuts. That's why we got SnapSend and Save.com, James. So, hey, this week we got a lot. We're going to talk about what's it look like on the other side. Why now, even though the rates are elevated, why it might be better. And we're going to show you proof. We are data driven. So we're going to show you proof on the stream. We're going to explain proof to you on radio. So go out, tell your friends, subscribe, newsletter, all that fun stuff. The chat is free, never any costs, no obligations, just answers. All you got to do is go to mortgagegumbo.com or snapsendandSave.com. Till Saturday, folks, hang in there and keep stirring the pot.